So some interesting news hit on Friday, and I did touch on it on the live stream, but I just decided to jump down a rabbit hole here with you guys and break this whole thing down. Now, if you're just hearing about this, I'm talking about the Qualcomm takeover of Intel. Now, normally I would say this is probably going to get blocked immediately, but the more I jump down this rabbit hole, I'm not so sure that this is going to get blocked, and let me explain the reasons why. Now, if I were to put odds on it, I think initially it's probably going to get blocked. There's probably going to be some stipulations here, and we're going to look at past takeovers that have happened that's kind of in the same ballpark here. If you're new to the channel, we work on fundamental analysis, which we're going to talk about Intel's fundamentals. I'm going to give you guys where I think the price stands without this takeover and where I think Qualcomm would bid for Intel shares as well. Now, of course, this is all just my opinion, not financial advice, but hopefully you guys enjoy, and let's get into what the heck is going on here. Now, in 2018, Trump blocks Broadcom-Qualcomm deal, citing national security concerns, and we've seen the FTC block everything this year. It's like Matumbo at the rim. It's hard to get anything through with the FTC recently. Now, the proposal of the Broadcom-Qualcomm deal was pretty interesting here. Broadcom proposed $70 per share to be received by Qualcomm shareholders, which would consist of $60 in cash and $10 in Broadcom shares. The proposal was a 28% premium over closing price of Qualcomm common stock on November 2nd, 2017, and the proposed transaction was valued at $130 billion, including $25 billion of net debt. Now, the odd thing is this is about the deal size that I think Intel would go for. I'm thinking Intel would go between, 130 to about 150. But at this point in time, the chip market was completely different. AI wasn't really a topic of conversation. And now we're more focused on what? We're more focused on domestic competition and domestic manufacturing. So if it benefits the US domestically and there's not too much overlay here, meaning that customers can get price gouged because two companies are coming together to really dominate a market, I think there's an opportunity for this to get through. So let's talk about some of the mergers that actually have worked or went through that were kind of successful here. Disney and Pixar was one. Sirius and XM Radio. Exxon and Mobil is kind of one that I want to highlight here. Now, this Exxon and Mobil deal was an $81 billion agreement, and this was in 1999, meaning if we were to fast forward nearly 25 years, what is that $81 billion worth? It's probably closer to nearly $200 billion. Now, obviously, we know more about more failed mergers than we do successful mergers, but I do think that Intel and Qualcomm would actually be a pretty successful merger here, and we'll go over that in a minute. And possibly one of the more uglier ones was Sears and Kmart. So now that we have an understanding of kind of what succeeded and what didn't, the one thing I want to point out is, to me, the chip manufacturing and the chip distribution is a little more like Exxon and Mobil because it's kind of like a commodity based. When we look at how Qualcomm's diversified, it's going to be smartphones and automotive is basically where their bread and butter is. When we look at Intel's going to be focused in on CPUs. That's where more than 50% of their revenue comes in. Right around $29 billion of revenue comes in from CPUs. They do right around $55 to $58 billion of revenue. Then it's databases and fab manufacturing. They are completely different overlays here, meaning if this were to be a merger, they would probably be one of the most dominant chip manufacturers and dominant chip players in all of the globe here. They would have exposure to automotive, smartphones, CPUs, their own in-house manufacturing, which should save them money and actually be competitive on prices. And that manufacturing would be done in the United States. And they would also have a good footprint in data centers, which we know is probably going to be a massive need over the next 5 to 10 years. Now, when this news officially dropped, I thought it was a little sketchy. I thought it was a little skeptical, but then I started really looking at this deal, and it does make sense to me personally. Now, if you don't agree with this, leave a comment down below. Let me know if I'm missing anything. But I believe with the Wall Street Journal reporting this, where there is smoke, there is definitely fire. Now, multiple news sources are stating that this Qualcomm talk with Intel is looking more real than ever before. Now, as far as I understand, Pat Gelsinger does have a good relationship with the CEO over at Qualcomm. So I believe that this communication has been probably in the works for a little bit longer than we all know. Now, in the Wall Street Journal, they're saying that this was approached a few days ago. My opinion is that this could have been approached a few weeks ago. The biggest question I have is when we look at the fundamentals of both companies, this is where it gets a little weird. Now, I think we all understand that Intel has fallen off pretty hard here, going from a $61 stock down to $21 and as low as $18 stock down 68 to as high as 70%. They also slashed their dividend to help with their liquidity profile because they were hemorrhaging a ton of money. But the bonus is that Intel is getting a lot of assistance from government. Intel also has assets underneath their umbrella that they could sell and possibly get their debt down and put some more cash on the balance sheet, but they're holding steadfast as of right now. When we look at the largest chip manufacturing, Samsung comes in at number 1 with $202 billion of top line revenue. Nvidia is number 2 with $79 billion of top line revenue. Taiwan Semi is number 3 with $71 billion of top line revenue. Intel is actually the 4th largest chip manufacturer with $55 billion of top-line revenue. This was a company doing over $70 billion, so we obviously see here they lost a tremendous amount of market share. Then you have Broadcom at number 5 and Qualcomm at number 6. We're looking pretty darn close to a $90 billion top-line revenue company, which would actually put it in a class of its own, even above Nvidia, even though Nvidia has the AI chip market under lock and has a ridiculous market cap. Now, this would give Qualcomm and Intel a substantial footprint when we talk about largest chip producers and having its own fab in-house. So we saw what the proposal was for Broadcom and Qualcomm. I think something like that could possibly happen. I'm having a hard time figuring out how this deal would actually get financed, but I keep looking at the Exxon and Mobil deal, and that's kind of where I think this might make sense. Where I think it would be similar to the Exxon Mobil deal, where Mobil shares received 1.32 shares of ExxonMobil for each one Mobil share. I think this would be a similar situation with what we'd see with Qualcomm. This is one of the few ways where I think we could see the acquisition make sense and how they would finance this, because even though Qualcomm does a lot less in revenue, they do right around $37 billion in revenue, and Intel does right around $55 billion in revenue, and now they're acquiring a company that does more revenue than they do. But the valuation of their stock is where the true asset, I think, lies. Their valuation is sitting at $188 billion. Intel's sitting just under $100 billion. So maybe they pay a 30-40% premium and they take out Intel for about $125-130 billion, a stock merger takeover. Now, I could be completely wrong here, but I'm not seeing how they're going to finance this deal with the amount of revenue and free cash flow they have. Obviously, this would be a lot different if it was one of the Fab 7 trying to take them over. We're talking about Apple, Google, Microsoft, any one of those companies. If they were trying to take over Intel, it would probably be a very small piece of shares and majority of cash and debt. But when we look at their cash flow, this is a company that's going to cash flow between $12 and $13 billion most likely. So I'm not seeing how they're going to finance $130 billion acquisition that would just put their leverage at a really, really high level. And then when we think about interest rates being higher now, the financing cost just doesn't make any sense for this takeover. So I just don't see them doing it this way. For those reasons, I do think it's going to be closer to what we see with the Exxon and Mobil acquisition. So what do I think Intel's worth before this acquisition? I think the path that they were going on, we obviously have to put a rate of return in for our risk that we're taking on to buy this individual equity. So I have 11% rate of return I'm looking for. And then we have to reset all their financials because they're kind of working backwards now. This was a company that was doing over $70 billion in revenue. Now starting back down in 2025, projected to do right around $55 billion. So a huge hit on the revenue side. So we have to discount the stock because of that. They're hemorrhaging money over the next few years. But at some point in time, I do think that they will get the ship righted. And I do think the fundamentals will start coming through. This is kind of one of the larger companies that we can't really have fail, especially when we talk about fab, data centers, PCs, and possible AI capabilities. This needs to be one of the front runners, in my opinion, for the US. So we're not so reliant on foreign countries to actually help create our technology. I think when we go back to Trump's original statement that it's a national security concern, I believe it's a national security concern if this deal doesn't go through. Right now, Intel is having some massive problems. I think everybody sees that. There's not enough commonality for this to be blocked by the FTC. I think there's enough diversification to actually make this look like a solid merger, and a solid merger that would be done domestically, which I think is personally needed. So once again, when we look at Intel's valuation, I do think this is probably closer to a $17 to $19 stock. Could it go lower than this? Obviously, it can go lower than this. But where I'm willing to buy it versus where I think a company is willing to take it over are two different things, because I'm putting a substantial amount of return in there. If I were to guess what I think Intel would be worth to Qualcomm, I would take out that rate of return and say, I think they're going to pay around $35 a share. Maybe they pay as high as $40 a share, but I think $35 makes a share. I think $35 a share makes a lot of sense. I think they're getting a lot for the money, and most likely they're still going to get all that government stimulus as well to help with manufacturing. And the other thing we want to kind of take a look at is over the last year, Intel's traded between $35 and $40 a share. Now, it recently has fallen off here. And so if we were to average out their price would probably be averaged out right around $32 to $33. And I think it makes sense to buy them around $32, $33. But I think they'll eventually bump up the bid to right around $35 to $40 a share. And that's where I think it's probably worth the acquisition. Now, if this does get blocked by the FTC, I did see in an article that Qualcomm would be willing to sell anything off from Intel's assets that would be considered unfair practice by the FTC, and so they wouldn't have ownership in that. They would sell off those assets that the FTC would be wanting to block because it would be unfair practice. So they're willing to sell off some of these assets, but they really want to get a lot of this in-house and be more diversified, I think, for multiple reasons. Number one, they really deal with cycles. All of chips really deal with cycles anyway. It's more like it's a very commodity driven type sector, much like oil. And so when there's high demand, things are great. When there's low demand, they hemorrhage money. And so for them to have a diversified portfolio, that would actually stabilize their earnings. So I understand why they would want to do that. And what are we hearing about Apple? Well, it seems like the phone demand is not there. Where does Qualcomm put a majority of their focus? Is in smartphones. So if smartphone demand is not there and the writing's on the wall, while the stock is trading at a premium, it does make sense to kind of make this acquisition here. Hopefully you guys enjoyed my dive into Intel, Qualcomm, the saga. I'm sure we're going to be hearing a lot more of this come Monday and Tuesday. It's going to be interesting to see how this plays out, whether they put a deal through or, FTC decides to give them a hard time. I actually think that there's a shot that this can kind of get through, though. Let me know what your thoughts are down below. As always, guys, appreciate your time, and we will see you in the next one.